cash is king in business, and until you see that, you can't pay your customers, you can't pay your staff or yourself. So you've got to have your eye on that. The opportunity you have is that you spend so much time and effort getting a business plan right, but you actually want to follow it right. So actually documenting the steps you're going to take and sticking with that is really important. What's critical is setting goals within your means.
What one key piece of advice would you like to give to all the entrepreneurs watching and listening today?
Financial mismanagement is usually why businesses fail. So, you have an opportunity and a responsibility to get on top of it.
Hey, and welcome to another episode of the Business Growth Show. I'm your host, Athin Cassiotis, and today I have an awesome guest. Her name is Jacqui Clarke, who is the author of Stop Worrying About Money, is a chartered accountant, chartered tax advisor, trusted advisor, board member, executor, and veteran business executive, and as a personal wealth and money management expert and over 3 decades of experience with 25 years at Deloitte and PwC, helping high net worth families, individuals, and business owners to build, manage, and preserve their wealth. And her message is simple: with careful planning and effort, you can manage your money so it doesn't manage you. Welcome, Jacqui, and thank you for being on the Business Growth Show.
Thanks, Athin. It's fabulous to be here, and I'm glad that our worlds have connected us.
Yeah, definitely. It's awesome to have you here as well. So it's going to be a great episode for everyone watching and listening today. And you are a successful entrepreneur. So for those people who don't know who you are, just introduce yourself by telling us more about you and your journey.
Oh, look, and how long have you got? But I think you covered it really nicely. But probably the most significant thing is inside those big organizations for a very long period of time, I had little entrepreneurial businesses that I created, usually to help crack the code on challenges in business and helping people set systems up better to help manage profitability and performance of their businesses. And stepped out 5 years ago to really do it my own way, actually, outside of systems and processes. So that sounds kind of ironic. But very much started my board career towards the tail end of my time at Deloitte. I was a partner there for almost 20 years and have basically helped entrepreneurs continue their success and actually preserve their wealth along the way, which is quite a unique challenge, actually, that comes by entrepreneurs in their growth journey. So it's something that I've had a lot of fun with, developed lots of different products to help people out actually through that journey. So Entrepreneur Connect was one of the fun things I did, which is that whole accounting platform to help people with startup businesses actually work out how to do their accounting and do their reporting and not miss their tax payments. Yes, because that was and that's probably something we might talk about today, but financial management or mismanagement was often the cause of business failure. And you know how good it is when you're an entrepreneur in particular, you're so focused on your product or your idea, your own creativity or what that might be, it's easy to forget about some of these other critical ingredients that we need to be aware of and observe in business, or make sure you have the right people around you to actually help you nail it.
Yeah, definitely. So true. It's so important, not just to make the money, but to keep it and allow it to grow, right? And I'm all about creating wealth and freedom. It's a big thing about, what I talk about. So it's great to have you on and delve into this a bit further. And let's delve a bit more into that business side, because you've already started talking about it there. So I know you talk about, I guess, the 10 ways to prevent business failure here. So tell us more about these.
So, I mean, why don't we start at the beginning? It's critical for people to do their research. And I think about people who might start, say, for example, someone wants to pick up a franchise business and they love the brand and they love that business and they think, I'm going to give that a go. But the bit of the research that's missing is the bit where you go and sit and observe that business in operation somewhere, observe the location, observe the customer. So to take time to recognize what aspects of that business make sense to you and maybe the ones that don't. So research is absolutely critical. And I think this is a really big picture comment, because how far do you go with the research? And a big part of that is understanding what the costs or the inputs are that you need to make for it to be successful. Now, we can't always have all those answers, but I think that's part of the planning. which is getting your research nailed at the start. People tend to jump in quite quickly as well.
Yeah, it's such a great point, and that's the business plan basically side, right? Is like, are you doing the research? Are you looking at the numbers? Are you testing things? Is this actually going to work, right, for what I want to do as a business? Yeah.
Yeah, and I love that you say that, because that's one of my next points, is really ensuring that people have a living business plan. Now, I got asked about this the other day, and I said, well, it's really common that people actually write a business plan because they might be looking for funding as well, or for some venture capital, whatever it might be. The opportunity you have is that you spend so much time and effort getting a business plan right, but you actually want to follow it right. So actually documenting the steps you're going to take and sticking with that is really important. Because the other thing I find too is some people, the sort of motto, fail cheaply, fail quickly. You want to set some goals around how much you're prepared to invest in the business before it turns a profit. And that is something that you want in that living business plan. Does that
Yeah.
make sense?
Yeah,
Yeah.
definitely. It's so true.
Yeah.
And I think it's out of that notion because a lot of people, they may go from having a skill to creating a business, and that's a little bit simpler, easy to transition, I guess. But that's not the only way, right? Like you can get loans from banks, you can get investors to help you to do things. There's a lot of other ways that you can start or even acquire, right? A business as well, if you're wanting to on that side. So it starts to become a little bit of an interesting game than just looking at it one dimensionally, so to speak.
Yeah. Yeah. No, I couldn't agree more.
Yeah, love it. Let's talk. I'm sure you've got more, but one thing that I think is really important for people, because you talk a lot about money, right? And
Mm.
I know for myself, I had some bad money beliefs thanks to my parents growing up. That not they did the best they could with what they got. I don't, it's not their fault, right? It's the way they were taught. But things like my dad told me like money is the root of all evil, like hundreds of times to me. I can't remember how many, right? And I had to change that, right? Once I became aware, Robert Kiyosaki's book Rich Dad Poor Dad just made me aware of it and allowed me to shift. And as soon as that happened at the start of my first business, then I started making money properly, right? From there. So I think the mindset side around money is such a thing, especially in Australia as well as all over the world. Of there. So I'd love to know your thoughts around
Mm.
the money mindset side and how we should be thinking about money.
Yeah. Oh, look, I love that you asked that, because one of the things that I like people to connect with when I first meet with them is their money story. And the fact that you talk about your dad's messaging to you, it's like the saver versus the spendthrift. So you might have had the experience, I bet with your heritage, you were probably a family of savers, right? Like being frugal with money, those types of things. But not everyone is blessed with that, even though I reckon your dad's right. There is a lot of evil about money. So sorry to say that to you, but the opportunity lies in how you can use that to, I think, make better decisions about money. So recognizing where you come from and what you're going to do differently about the money story that you're telling yourself, or the behavior to money that maybe you've learned in your family. So you can do it differently, and you can say, hey, actually, money's not evil. I can use money for good decisions or choices. So yeah, I think there's an opportunity there to connect with that. I talk a lot about accountability and responsibility when it comes to money. And it's nice that I think perhaps that you were having conversations about money growing up. A lot of people aren't. In fact, it's not normal to talk about money. I would like it to be more normal, because we have a big gap in our financial literacy development in Australia. No one teaches it at school, or rarely is it taught at school. So you sort of land into the world, you get your first paycheck. What happens? You spend it. Where do you get that guidance? Only if you're fortunate enough that you've had parents that are around that have done something. They've maybe saved money, they maybe have some investment. These are all things that, if you're fortunate enough to have that experience, great. But the only other way is by learning, reading, talking to people, and developing your own financial literacy through experience.
Yeah, definitely. So true. It's so interesting. I had to learn, and it's funny you talk about the spender saver thing, right? Because with my wife, right, I've become a spender more
Ah,
with that from my parents being savers, like you said, and my wife is more of the saver, right? Which I think is a good combination there potentially, right? So because it could be interesting if both partners at some point, right, are one or the other with the type of life that will get created. Correct? Yeah.
Yeah. Well, there is research that says that, and just to add to maybe that conversation, research says that when husband or spouses share their bank accounts and financial information, they're more likely to survive or last. So having open conversations about how you're spending money, and even if it's a particular style that you might have, having open communication about how money is being spent is incredibly valuable in relationships. And I also think it goes to a much bigger conversation around how we set financial goals. So, one of those things might be if you've got a business that you're trying to grow, there's a limit to how much of your own private capital you might tap into to build that business, which goes against that fail quickly and cheaply motto that I like to keep in the background. But there's a communication in the relationship about how far you're going to go with that and what other things you might be doing with your money or income,
Yeah.
but actually not delegating that conversation or that responsibility to one or the other person in a relationship as well. So I like everyone to be personally accountable and responsible for income and expenditure. It's not all one way because money comes in and money goes out, and we want to be really aligned about that if we can be.
Yeah, I love that. We're definitely having, more conversations in this. And I think it's funny, right? Because I know you being an accountant
Yeah.
background, is that like a lot of people, especially business owners, you go in and you're like, I want to pay the least amount of tax, right? Like that's
Oh,
the thing. And
that,
then
that, I have to, that's the funniest thing, Ethan. I get that every time. And I say to people, no, no, you've got it wrong. Paying tax means you are making money. Like, tick that box, please. How many
definitely.
people come in want to? I have conversations with people over years, Ethan, where they ring me and they say, "I'd like your help on this." I go, "There's only this way you can do it." And it's not that I lack creativity. It's just that I know the bottom line is if you are making money, you are going to pay tax, and that's a good thing. Got to remember that.
Yeah, I love it. That's one thing I learned from another mentor towards the start of my journey. And it also comes down to the investing side, right? Because you want to show that you're making more income and things like that to be able to invest in properties or other things like that as well.
Yeah. If you're proudly able to say that you're not paying any tax, I think there's a problem, especially in Australia where we tax people pretty quickly. Actually, I was listening to another podcast today, and the host on it was saying how in America, how you only ever hear from the IRS about how much tax they want from you. She was comparing the systems between Medicare and the IRS as a comparison to the Australian Taxation Office. Like we get a Medicare refund, so we hear from the government in Australia, whereas in the US, you only, hear from them when they want you to pay tax. Anyway.
Yeah, very interesting. Different world over there, and yeah, their laws are very interesting. But we'll keep to
Yeah,
the
move on from.
Australian
Yes, I was
stuff for
going to say,
now.
stick to this. Yes.
Ours is they're a little bit more flexible with what they
Mm.
can do. We're a little bit more stringent here in
Mm.
Australia, coming from the
Definitely.
UK, in doing things right. You talked about financial goals there, right? I think it's a really important topic. Whether it's as an individual or especially if you've got a partner or you're having a family, right? With children and
Mm.
everything like that. So, what are your thoughts around like how to have that conversation, how to create great goals, in terms of how we structure that? Yeah.
Yeah. And look, I continually look at my goals, and perhaps one of the secrets to getting this right, Ethan, is when you sit down with your partner or someone and you say, let's set financial goals, they're like, time out, their ears are blocked. They're like, I don't want to know about this. Then you say, well, let's think about how long we're going to have this mortgage for. Are we going to live in this house? Do we want to renovate it? How many kids are we having? Are they going to particular schools? What are the costs of all that? That's a different conversation to what's a financial goal. What I like to think is, and I sort of have a rolling 5 year horizon. I have a goal. That goal might be spend 3 months in Europe, or it might be work one less day a week, whatever that goal might be for you. There's a financial impact of that. So you come back to here and now, and I think what's critical is setting goals within your means. Because you don't want to set an unrealistic goal either, which is let's be mortgage free by the age of 35. Or, I say that's not fair. Many of your listeners might be saying, hey, I can do that. It's actually about engaging in the process and setting something that is realistic for you so that you can achieve it, take the win and move on to the next goal. But I think looking out on a 5-year horizon is a great way. I think of things like where I might like to travel, what my business might look like in 18 months' time, 2 years' time, 5 years' time, who are the people I'm going to surround myself with in that period of time as well. All of it, having your mentors or your coaches, who they are, how they might shift over that, they're all goals. You just recognize that if you're going to get a new coach, it's going to cost you more money. So that's a financial aspect that you need to draw into the equation in setting the goals. But I don't think it's easy to do much without setting the goal. The failing to plan, planning to fail. You've got to start somewhere. And in relationships, the easiest way to do it, of course, is to have a conversation about something more lifestyle driven is a great way of engaging someone. It's a bit like, I want to spend money on X or Y. And I talk about the three biggest money mistakes. Number one being wearing and driving your money. If money's in the bank and you think, I want to get a new car, or I'd like to get a new tennis racket, set of golf clubs, a handbag, whatever it is, if we've said that we're going to pay off our mortgage by this date, there's like a trade-off, and you have the opportunity to make a choice. In the absence of setting the goal, there's no choice to be made. So, I think of it also like that North Star, like where do we want to get to? Okay, come back to today. What are the steps we need to take to get there? Yeah, so incredibly powerful. And whether it's on a personal front or on a business front or on a combination of two, there's a great opportunity there for you to set those goals and share them.
Yeah, definitely. I love that. Really, really powerful. I like the breaking down. And then because then you can link it to something. Oh, I want to travel here. What does that look like? Or, all of those areas. And doing it. Because otherwise people, like you were saying at the end there, they might just have a lifestyle business. They're like, I get to just do what I want, but then you're not sort of, investing in the things or creating those goals. You're just using to, enjoy your life now, which can be nice, but it's not necessarily setting you up for the long term, right? In terms of what you're doing there.
No, and that's one other thing to cover off is it's very easy. And I'm getting asked questions now about how to retire right. Like, what's the journey to retirement? Now, I don't necessarily think anyone's going to retire anymore, but to think how you're going to work differently in the future, you need to be saving money to create investments that generate income that are different or separate from you turning up to work every day. And it's very easy when the money's coming in and the bills are getting paid, the money goes out the door, to not actually pause and say, hang on, are we on a treadmill here? Is this just money in, money out? Where do I get off this thing? It's like, oh, actually, you need to spend less, save some money, generate another source of income. And then you start to plan your path of exit. And that might be a really exciting financial goal or lifestyle goal, which is, I don't want to do this particular job or this type of business or have this combination of business, because some of these things I don't like doing and some of them I love doing. How can you ever create it? How do you get off that treadmill? We have to nail your expense side of things
Yeah.
primarily.
Yeah, I love that. Awesome stuff. You talked about obviously getting that cash flow in, right? Basically, right? From that's coming from something that's not you, putting it in from, I guess, assets, investing into things. Let's talk a bit about diversification, I guess, then, right? Because Australians love property and it's definitely a big thing, but there's a lot of other ways to put money. So what are your thoughts on, different asset classes, diversification and everything like that with, growing your wealth and that over time?
Oh, yeah. Look, there's a lot of options, and now's a very tough time to be asking that question. Apart from a good old-fashioned term deposit, lots of other things are going to be a little bit risky. But ETFs are an easy way to access the market. Sure, there's managed funds. Direct equities right now are not very appealing because they've taken a massive hit. One of the things I say to people is you need to do your due diligence. And just because Jacqui or Athin said this is a good stock or this is an interesting investment, until you understand it yourself, it's not worth putting your money into. And so we might not all have the same amount of financial training or business acumen, but don't put money into things blindly either. And like we love property in Australia, we're big fans of property. We understand it pretty, the average Joe understands property pretty well. If you do, great. If you don't, one of the things I do talk about, Nathan, is that personal finance village. So having that's like my trusted network of people that can help me make these decisions. So it might be a business coach, it might be a family friend, it could be an accountant, it could be a lawyer, it could be a financial advisor, but having people around you to support you making those types of decisions. I mean, there's so many things we can invest in a business together. There might be a business idea I'd like to get off the ground as well, that's more mine than someone else's. But that, yeah, honestly, there's a thousand, I mean, millions of options for us. But the main contemplation is, do you understand it yourself?
Yeah.
And then the context for that is it a yield-based thing? Is it a growth-based thing? Am I going to see income from it today or in 5 years' time? Is it going to grow and be worth something more in the future? So many options, and if you've really got no idea, term deposits or those types of things, just high interest earning accounts might be the safest thing for you right now.
Yeah, it's great points, and I love the thing about understanding it, right? And then it's a personal choice, right? Because you could have experts every single asset class saying this is the best thing, you should put your money into it, right? Which that's because that's their perspective, right? Because they put their money into it or whatever, and they did it. So I was talking about it with a client who loves property, right, of mine. So he's buying all these property. That's what he loves. To me, I love business, so I've invested in businesses. You know what I mean? So there's
Right.
right or wrong. There's different, I guess, risk profiles in that as well. And maybe we should talk about that, from a risk perspective of understanding what yours is and, I guess your partners and how that sort of conversation happens with money, right? On how you're building things over time too.
Yeah, so I've always been fairly conservative. I have probably not unlike yourself had a strong background of property, and also because I was a partner in a big accounting firm, it wasn't easy for us to directly invest in the equity markets because every time Deloitte picked up a new audit, we'd have to sell our shares. So you were never selling or buying at the right time. So it sort of made it difficult to invest in those types of things. But we could access and manage funds and different types of assets. So I've been building up my own experience with that over time as well. So yeah, it's I guess the most important thing is being aligned in that decision making. And again, making sure one of you knows clearly what this asset or investment's about and who's going to be doing the regular check-ins and follow-ups. But I mean, my husband and I certainly both had a conservative profile, but we've also followed a path where we've seen debt as a good thing. Now that's, when I think about your dad, my dad was always like, you can't get ahead without debt. That was my dad's thing. You need debt. So I've always been comfortable carrying a fair amount of debt. Now, as I get older, I'm thinking, oh, do I need to continue with that? Is that serving me? But again, that's something you've got to work out whether you're comfortable with and what are the considerations on your financial well-being with respect to that debt. Does it cause stress? Do you work in a particular industry or job, or run your business a particular way just because it produces cash to then pay that debt? So these are all things you want to consider.
Yeah, it's a great point about debt. And that's that conversation about good debt versus bad debt, right? And things like that. It's like, is the debt working for you? It's not a credit card, for example, that's just giving you high interest rate. We're talking about debt that's, for an asset or something that's going to be building, right? And giving you cash flow or whatever that looks like
Yeah.
at the time.
And so many people, conversations I'm regularly in is money going into what I'd call lifestyle assets, which is generally not good debt. So you, you want to have that longer view on those types of investments. So are they easy to exit? So is that asset something that you can exit if you need to? It's probably not tax deductible debt. So I love tax deductible debt. That's rarely the case with a lifestyle investment, or in fact, probably never. Like a big boat or a yacht or a country property, whatever it might be. These are all things that you'd want to be thinking very carefully about. Now, good debt is tax deductible debt that's offset against income that you pay tax on.
Yeah, definitely. It's so true, right? And understanding that. And this is why having great advisors and people around you talking about that village, right, is so important because you don't know what you don't know. And getting the team on board to go, okay, this is the strategy that we're doing, and what does that look like? What are the decisions that I should make? And I think it's about, to me, it's about asking the questions, like learning. I'm always investing a lot into myself and then just asking the questions, because if you just sit there, even if you just learn, that's one good thing. But until you ask more questions to get the specific stuff for you, then you're not going to really get ahead more, right? In terms of that area of how it's specific to you. Yeah.
Yeah, that's true. So one of the interesting things, if you contemplate the personal finance village, if you're an entrepreneur in your business and you're really good at strategy, right? But you may not be good at managing cash flow. And so there's at some point in that business journey, you got to recognize these are my strengths and these are the areas I could develop, or I could hire somebody to help me with these things. And that goes sort of full circle, both in our professional and our personal lives, like with the personal finance village. Where's the gap? So that's a skill I can develop to this level, but then who else can I bring into my village, or onto my team to actually help close that gap? And you often see founding CEOs replacing themselves because they get to a point where, whether it be strategically or otherwise, they might be more focused. They might need someone more focused operationally. So recognizing you're at that point and being able to bring somebody into the business is very important, and can be a journey of incredible growth once you recognize that.
Yeah, definitely. I love it. And yeah, I definitely, one of the initial things that I talk a lot about with my clients is the cash flow side, because a lot of them don't understand it. But it's the lifeblood, right, of the
Yeah,
business. Because
yeah,
you can't pay yourself or your team with profit, right? It's got to be with cash on that area
right.
there. Yeah.
Yeah. Yes, cash is king. We all should have that motto, whether it's real cash or, I mean, what cash is these days, but cash is king in business. And until you see that, you can't pay your customers, you can't pay staff or yourself. So you've got to have your eye on that. And, lots of businesses are quite different. If you're in a consulting style business, your income might be lumpier than it might be if you're running the local cafe. We've got, money trickling in all the time. One of the things that's really important, I think, is that sort of debtor creditor strategy as well. So managing when money's coming in as income versus when you pay people out. You don't want to have too much of a gap between the management of cash flow in that respect as well. I know some people, when money's in the bank, they're like, oh, I've got to pay all my bills, which is great. But I say, don't pay all those bills before all of your customers have paid you. Like, you want to get that as close as you can, in a good way.
Yeah, that's right. Look at those terms. It's funny,
Mm.
right? Because I deal with a few clients in the construction space, and that's one of the most volatile industries, right? With a lot of
Yeah, and
businesses.
payments and lumpy cash as well.
Yeah,
Yeah.
and it's crazy, right? Like I was speaking to a client today, and like I always like to do, like I'd say 14 terms. Sometimes people do seven, but it's like 30. Okay, you're starting to push it a little bit, but some of these are like 30 days at the end of the month. So if you invoice on the second of the month, it's actually like 60 days
Mm.
payment terms. I'm like, that's not good to agree to that stuff. It's
No,
crazy.
no, it makes it really difficult for you to manage your cash flow. And so you want to align with that as best you can. But also, it's important we teach people how to treat us. So if somebody's got those types of terms, you've got to work out how to manipulate your process so that you don't sort of sit at the 60-day mark or the 58-day mark. Do whatever you can to bring it back to under 30.
Yeah. And that's a little bit of that pushback or that awareness or having that conversation, I think, as well. Because like, I work with a lot of big brands in my consulting business, and 30 days is normal for them payment terms. But I just said, no, you're giving me 14 days, right? And a lot of people probably wouldn't do that to a big brand. That is everywhere. But I'm like, no, I'm a small business. 14-day payment terms. They're like, all right, we'll do something special for you. I need to get it approved and everything like that. And they did it for me, right? So I think it's speaking up, going, how can we make this work? What's a negotiation or a way that we can do this so that I can make sure that I can deliver for you, right? Because I'm providing a product or service for you, and then that it's fair, right, in that way as well.
Yeah, you've got to have the courage to ask. And I like that you've done that. I also see that quite often with big suppliers who are like, the big hairy bear. Be prepared to ask them, because you might be surprised a lot of other people have already done it. It's just that they'll get away with it until someone asks the question, and they're very happy to keep the people who aren't asking the question at the 30 plus days, but actually ask the question. You might be surprised by the answer you get, but don't be afraid to ask.
Yeah, exactly. It's all a conversation, right? And it's like getting people on my podcast, these big names. I interviewed a very big name recently that'll come out soon. And he was like, the reason why you got me is because you asked. You know what I mean?
Yeah,
Like,
exactly.
so just ask exactly like what Jackie's saying. You never know, right? Is
Right.
in that area there, which I love. Um Now you got an accounting background. One thing I
Mm.
like talking about, I'd love to know from your perspective, is around structures for things,
Oh,
right?
okay. Yes. Yes.
Yeah, because there's things like obviously there's personal name stuff, you got companies, you got trusts, and all these different areas. Now, we're not necessarily talking about like advice here, but there's different considerations like capital gains tax and things like that, right? That we can legally save some things over time. So, do you want to just maybe for those people that aren't aware of sort of how it works, or some of those options and I guess pros and cons and things like that for them as
Yes.
well for our money?
Yeah, and look, probably the best thing is when people shift from that sole trader environment where you're owning the business into a company, which is a nice progression, if you like. The critical point and where the mistakes are typically made is who owns the shares in the company. Now, the one who you want to own the shares is typically a discretionary trust. And that gives you flexibility down the track to distribute the dividends from the company through to family members uh, or somewhere else in your group, depending on the size of it, depending on the nature of the business you've got. I think it's important when you're setting up your structure, if you've got intellectual property, that you contemplate having that in a separate structure, like a separate company, to the operating business as well. So without setting you up with five companies and a discretionary trust on the top of each one. And I hope I'm answering this question because, the natural thing for me to do here is I picture very quickly a structure chart. And for anyone listening, you want to make sure that they've got a well documented structure. I often meet with people who don't have it on a page, which is a company, who owns the shares, who the directors are, those types of things. You want to make sure that you've always got that handy so you can recognize what you might need to add from that or change over time. So companies obviously pay tax at anywhere between 25 and 30% or in every dollar. And then those profits get distributed out. Now, if it's another company who owns the shares in that company, flows through in a similar way. But then you can distribute up to trust in the company, which then would come out possibly to you as an individual, which would be a frank dividend, is the type of income we're talking through that process. Now, I hope you're following me. And if you're not, then we have a problem because no one else is either. But look, the best structure is a company because it offers you a layer of protection, if you like, a corporate veil, as we call with a company. But you do have responsibilities if you're a director of that company. So we have fiduciary responsibilities as a director of a company. Now, I'm a company director by trade, so to speak, now. So there's quite significant responsibilities on directors, and we all need to be aware of those if we have a company. It's not just the ASX listed companies' directors, it's the same rules for them as it is for Jacqui Clarke. You need to be aware of what those responsibilities are, and taking reasonable care in the things that you do is really important. So that's a bit of a start on that topic. Is there something specific, Athin, that I can sort of answer that you think might appeal to the listeners?
Yeah, I think it's a great little inkling there. And I was following, I've got quite stuff. So if you don't
Yes.
understand a bit of what Jackie said, Google these things or start to ask,
Yeah.
your
Yeah.
your team about what they are, or your accountant, right? To
Mm.
understand all of this, these different structures, and potentially get yourself restructured, right? Especially earlier in the game, is important. So I think there was a really cool point that you mentioned there, which I think was a high level point around IP, right?
Yeah.
Around in that separate structure there. So is that completely separate from that, like a completely another company trust that's not
Yes.
connected to anything else, basically? Yeah.
Yes, that's how I'd structure it. I'd put the IP in a completely separate company, and I'd contemplate if there was a different director. So whether there was a spouse that was appropriate, you could do that as well. So you're really separating them. You still could have the shares held though by your family trust or discretionary trust, as we've talked about. So you could have the same overall ownership structure, but the actual company itself might just hold the IP and nothing else. So it's almost dormant, arguably, whereas you'll have an operating business in another company, which is where most of the profit's generated. And some people might charge service fees or all sorts of things across at the end of the day, in terms of your group or family group, you're going to pay the corporate rate of tax, or you should be paying the corporate rate of tax on profit. So that's at the end of the day, it's all you, really. You just got to remember that as well, because people can get a little bit lost in that sometimes.
Yeah, and it also could happen from a licensing perspective or something else later, right? Where if you're, setting the business or anything's coming in there, you obviously can charge those fees and things like that, right? At a later
Yeah.
point. Yeah.
It's no different to owning your business, your office, instead of renting it off somebody else. Now, you might run a very successful business and decide to sell the business. If you own the building, you might end up having a tenant for the next 10 years of your life. So they're all just things to consider again on that goal setting around the business and where you'd like to take it. What are the types of things that are going to be valuable to us here? No different to if you're running a restaurant, or as you would know with building companies, they might actually develop something and keep it themselves over a period of time to then sell down the tracks and not sell part of the development off the plan, keep some of it for a time when the market or the values start to improve or enhance.
Yeah, definitely. And then just one other
Oh,
question.
oh, sorry, Athin, if I
Okay.
could just add, because this is
Yeah.
important, I get asked this a lot, and this goes to that I'm paying tax conversation. There's only two ways that you can legitimately take money out of your company. One is through a dividend, and the other is through salary and wages. And people often get caught up taking money out by way of loan, but it's a bit of a fool's paradise. So the money's sitting in the bank. You have to think of it as the company's not yours until you're paying a dividend or until you're taking a wage. A lot of people get loan monies out. You might have heard Division 7A. These things trip people up all the time, especially in the early stages of business when they maybe not have set up in terms of the right cash flow mechanisms or paid tax where they've got corporate tax there that can then make the dividends franked. Anyway, without going into too much detail, there's only two ways. There's technically a third, which is a loan, but the problem with loans is they come back to bite you, or can.
Yeah. Yeah, one thing to add on that I've seen that people do wrong, just to give an example, is
Mm.
like they'll put it in their offset account for their property or something like that, which is not necessarily what you should be doing, right? On doing that with the money.
100% right. And I'd support that as long as they were really clear on the tax strategy around that, which is making sure that it's repaid back into the company bank account at the time of lodging the tax return.
Yeah, there you go. So, all these little things, right? Where you got to be checking with someone, like Jacqui there. It's understanding that you could be, liable for something that you think is
Absolutely.
something there, which is great. And one other question that would be interesting, I'd love to know your thoughts on, is around holding companies here. So there's a thing where, let's say I've got a partner and we want to create a holding company that might be owned by my trust halfly or whatever like that, and then we might want to do acquisitions or have other companies or other things like that underneath it, compared to some other type of structure like a unit trust or something like that. So what are your thoughts around those types of, I guess, structures, for doing things with other people as well?
Yeah, well, actually, you raised a really good point, which was the unit trust might be the best structure to then own the holding company so that you and your fellow partners have a certain number of units, which arguably are the levels of interest in that holding company. So you might find that it's easier to transact on the units than it is on anything else, like it is shares in a company. Units are similar to that. So, yeah, I mean, I think holding company structures have been around forever and they're common, if that makes sense, if you're likely to be doing things with a business partner. What's probably more important, though, Ethan, is the agreement or the document that explains what happens if you want to get out or if you die or if some other situation. So actually what's important is the governing documents of that arrangement, especially if it's like with unrelated parties, like a mate. You and a mate decide you're going to go into this business together. We're going to have a unit trust, owning. So a unit trust, my unit trust, your unit trust, owning the shares in the company, the holding company. You want to make sure that there's actually a document that explains, in the case of any number of events happening, what you can do and can't do to get out of that situation.
Yeah, it's a great point, right? And I think that you're highlighting a lot of amazing things here, because a lot of people don't think about this. They go into business, they don't have the shareholders agreement or these other
Well,
agreements.
because we're
Important.
focused on the idea, the opportunity, the cash that might be coming from it. It all sounds great. It's just that at that moment, nobody's dying, nobody's sick. We're happy. cash is king. It's coming out, it's available to us. It all sounds good, but we just want to be able to be prepared to plan for other things, challenges.
Yeah, definitely. Really amazing points. I loved all this stuff, and that's why I wanted to go a little bit into those
Yeah,
specifics because
that's good.
it'll help for people to ask the right questions, whether it's to yourself, or to someone else, of going, how can we do this properly? Yeah,
Yeah, and you think about dividend strategy, like what's our agreement around profits? What about bank account signatories? Like, how do we get money out? I've seen situations where someone has been able to take all the money out, and the other person who may be the creative isn't aware of how the financial stuff works or the bookkeeping or whatever it might be. And before you know it, there's nothing left.
yeah, it's pretty crazy, and this is where getting the right business partners and things hopefully is
Yeah,
ideal. But sometimes money can change people in a way which is not ideal. Yeah.
inevitably it does.
Yeah.
Yeah.
So, but yeah, I don't know. I was brought up with a lot of integrity growing up, so I could never do that, right? But I hear a lot of stories of people, where they do that. They just, whether they do it like dodgily, where they send
Mm.
invoices to pay themselves, or whether they just take the money and do it really bad or things like
Well,
that.
the
Yeah.
other thing is, Athan, like I've worked with people who've had gambling or addiction issues, and they might be very good at the business side of it, but then have a little habit on the side that's not directly related to the business, and that's where things go pear-shaped. And I think it might be your oldest mate from school, someone you trust implicitly, but he might have a little, he might like to bet on the horses on the weekend or whatever it is, and sometimes that can get out of control. And then let's say he's got a gambling debt and somebody's knocking on his door, and the only option he's got is the money in the bank account that he shares with you. Now, if he's trying to protect his family, he's going to take that. And he might be full of integrity and value your relationship above everything else, but yeah, we have to protect ourselves from those situations
Yeah.
by being across the detail.
Definitely. Backed into a corner, things will do things. You just got to make sure that it's all, down
Because
packed.
you'll
Like,
go, your family, people will go their family first, protect my family first, then your second.
yeah, definitely. Makes a lot of sense. And let's quickly talk about your book as well. Stop worrying about money, which is
Yes.
great line there, title. So yeah, lovely book. Looks awesome. So tell us more about it and how it will help us.
Yeah, well, look, it's a full journey. It's really about securing your financial future. So the main thing is what I call getting your financial house in order. So setting things up well at the start, making sure you can sort of navigate all life's ups and downs. And I do cover all sorts of topics like divorce, businesses, side hustles, kids and money, you name it, throughout the book. But the main thing is really about coming to grips with money mistakes, so things that you've done wrong in the past and how to move on from those, but how to really um, understand what it costs to open your front door, which is one of the things I focus on with a lot of people. Very few people can tell me that. So until you do that, you can't easily set a financial goal. And then actually working on your relationship with money, understanding that money story and seeing how that plays out and what things you can change along the way. So it's my financial wisdom that I've gathered over these last 50 years on the planet, essentially captured in one book.
Yeah, amazing. Sounds great. I'll definitely be checking it out, and yeah, definitely sounds amazing for everybody, no matter where you're at, in your journey. Because I'm sure whether you have no knowledge, a lot of knowledge, or somewhere in between, there's always things to learn. Right, that's my mentality.
Yeah.
With money or anything, in life as well.
Yeah,
But
and
money,
I have people often say this to me, I have written it very practically. It's very easy to access. Whether you're 19 or 82, as my mother-in-law often says, this book's perfect for me. I've written it to help people out. You don't need to come with any knowledge about money specifically.
yeah, cool.
Maybe just a will to want to do it differently.
Definitely, right? That's the key thing. What's that saying? If you keep doing the same thing and expect a different result, it's insanity, right? So if the money is not that good in personal, business, whatever, something's got to change the beliefs, the actions, right, that you're taking to get it differently. And that could be with people around you helping you
Yeah,
as well.
no, you've absolutely nailed it.
Yeah, love it. Awesome stuff. Well, you shared so much value with us here today. And I guess as we're starting to wrap up, what one key piece of advice would you like to give to all the entrepreneurs watching and listening today?
Oh, that's a tough one. I say cash is king, and financial mismanagement is usually why businesses fail. So, you have an opportunity and a responsibility to get on top of it.
Yeah, awesome. Love it. Simple and effective, right? That's the thing. It's the responsibility. So get on top of it and important for yourself, your family, everything like that, the people around you. So yeah, love it. Awesome stuff. And yeah, we connected through our networks. I learned about your awesome journey from having over 3 decades of experience, 25 years at Deloitte and PwC to now being a personal wealth and money management expert. Amazing woman. Shared so much gold with us here today, and I'm sure you continue to help high net worth families, individuals, business owners to build, manage, and preserve their wealth. Very grateful that we connected. Look forward to partnering with you as well. So, Jacqui, how can people find you and get in touch with you?
Pretty easily. I'm on LinkedIn, Jacqui Clarke. My website's jacquiclarke.me. On Instagram, Jacqui Clarke 000. The 000 is for help, which probably comes as no surprise to you, and the same Jacqui Clarke on Facebook. So I'm very easy to find. And if anybody wants to give me a call, have a chat, by all means reach out. Also on my website is a free chapter in the book, and all of the what I call financial sort of exercises, or the financial companion, is all downloadable directly on the website for free. So you can try it out.
Yeah, amazing. Right. So definitely check out Jacqui there. Get on the website, get that free chapter of the book. Check it all out the socials. It'll all be in the show notes as well now. So you can easily find her. And take your money, story, your money generally in your life, in your business to that next level, right? Of where you're wanting to do. Whatever that outcome is. So yeah, it's been a pleasure interviewing you today. And thanks for being on the Business Growth Show.
Thank you, Athin. I've enjoyed it.
Thank you for watching and listening to the Business Growth Show, where we talk about everything on business growth. And please like, subscribe, and leave us a 5-star review. You can find me on LinkedIn, Facebook, Instagram, and YouTube as Athin Cassiotis, or visit my website, athincassiotis.com. And if you want to grow and scale your business, you'd reach out to me on any platform to see if we're a good fit. So until next time, remember that our business grows where we learn skills and take action using them in spite of fear. So let's create wealth and freedom together.